Hello everybody. So, welcome. This is the recap of the first day of this week. It's Monday the 12th of August. And we first want to have a look at my hypos from this big picture preparation of today. And I write down hypo number one. I said we have two range long levels. Number one, this is from the overnight pre-market lower value edge. This is the area 177.12 to 14 and 177.06. Hypo 2. If we see an increasing buy volume and holding above the higher pre-market volume edge, look for the long with target number one, yesterday value area high, 177.34. And if increasing buying volume keeps on with absorption and holding at the yesterday value area high, we stay with the long or look for a new one with targets then 177.40 and for the third position or home run even the 177.50. And hypo 3, short only with increasing sell volume and holding below the 03 level with targets 76.96 and 76.91 plus. So that's what it looked like at around 8 o'clock and 8:40 in the morning. And we saw that here's this distribution from the overnight B model with this area for the short and the other side for the long with the range long levels and with the more bullish levels at the top with the targets value area high, even above with the 40 and then with the 50 taken from the composite profile here. Wonderful. All right. Let's have a look how it was played out. With the open, we see people testing immediately the short side, and we couldn't get into a possible range short trade as we haven't seen no rejection, but only getting in the market and playing the short. So market was played at the short side, but we see immediately as we touch our range level of 14, remember hypo 1, range long level 12 and 14, the volume edge, you see it here from the last day and today. So 14, we see first people immediately getting out, responsive buying number one, and I always tell you that I'm looking for a double rejection. So we want to see they testing the low again, even here with delta divergence, and buyers coming in here right now at 9 o'clock and 6 minutes and 30 seconds. So I said, here it's a very good moment. One could have entered at the 17 here with this little pullback. Target number one, the high volume edge around the 24 level. This was reached then at 9 o'clock and 17 minutes. We see now some little bit range trading, but you see that the range short who was about to start here with the first rejection, double rejection, didn't show us. We didn't see some double rejection, but we see a first rejection and selling quite heavy. But you see, the first sign of a more bullish advantage was here not to go then for the range short and not to wait here for a second rejection, because you see immediately rejection and buyers coming in again once they tested only 1, 2, 3 ticks lower. Okay? So that doesn't mean that you have to go for the long now, but at least the signs for the double rejection for the short like we have here, that's not the same. You will agree. Okay. What happens then? Technically, some holding structure. That mean time now gets this situation a little bit more structured. And we see as we pulling lower with some selling volume, again, rejection, active buying. Pulling to the low, selling, rejection. And now even more active buying, absorption, buying. Cannot take out the long yet. Look into the lower side, short side again. Bad risk reward, low volatility at this moment. I said from the beginning on no short trade, but you see absorption. Pushing 1, 2 ticks lower, but absorption. More confident buying. Absorption, confident buying. Taking out the long. Now we're at the upper pre-market edge. Hypo number 2, if we taken out the high, we pulling back. This happens here. Short. Short number 1. Pushing 1 tick lower. Short number 2. short number 2 delta, we stay at the 26. First signs, absorption. Sign number 2, 1 minute later, increasing volume of delta again, went the way up to the top again. So this was the moment when you see 1, 2, 3 candles around here to enter, then cheap around the 28 area maybe. One could have even gotten in with a pullback at the 26, but we want to react here on this delta structure that's still coming in and stay strong at the top, holding. Enter here. One needs to put the stop then below the volume edge. I say 2 ticks below, that mean 28 entered. 2 ticks below would mean at the 23, 24. Say you have it at 24. We touched the 24 with some shorts here, but there was a high probability that you not got stopped out because there were only about 20 contracts sold into the bid. If you're not the first in a row, what is normally not the case because there are already some liquidity and algos who provide, and other guys who provide liquidity, that means you not got stopped out here even with the very tight stop and not the 23 but the 24 stop. All right, this is very important. You can stay with this 4 tick rule and 2 stick below the volume edge. All right, what happens? Absorption test. You see here, buy control level was this where the most buy volume was executed here. That means starting from this area here at the 25 area. So we only took out 1 tick to the 24. And after they see that nobody's selling anymore, and after we see that this absorption a little bit also, that there is not selling anymore, they get in with active buying, and you reach your target number 1 of my hypo 2. Then I told you, and we want to look at the moment situation, at the moment volume. Once we see, as long everything is pretty and wonderful, because we see higher highs and higher lows. I mean, everything is pretty wonderful for your emotional mindset of maybe a advantage trader, but not a consistent profitable trader. As long as it is like this, you may agree, you may have no pain. At this moment, this was 10 o'clock and 11 minutes. And now you can make a major mistake. You can say, wow, you can trade by your P&L, which you not should, but your emotion maybe tell you, let's trade by P&L. You entered here to 28. You already made your first 6 ticks with your first contracts. You're still in with a second contract because you made your big picture preparation, maybe like I did, and say, okay, I see this, like Anton says it, 40 is the next target. This is the volume edge of the composite and of the profile. So you may see now there is a volume at this moment 10-11 created here, some value, and there's a volume edge at the 35. You may say then, okay, the rule is as long as low volume node is not taken out and even 1-2 tick stop below, that means at 33, I put my stop already now at 33. And I said, don't do that. This is a mistake. Bulls are comfortable in control starting from this area around again at the 28 level, 27, where we entered before 10 minutes here. So they're in control. They can let some people looking for lower prices and can prove them if there's still nobody more available in selling, or if they come in again, buyers aggressively in. Yeah, they can wait for the signs to appear. It's wonderful. Then everybody knows if something like this happens, what then have happened? There's like some kind of excess on the downside and proven we want to stay in control. All right. So 35. 34, 37, and 32 got traded. All right, if you traded the way I said, too much looking to the P&L and say, okay, there's some value already here. I don't want to see prices going lower than 34, 37, or 33 area. This person got stopped out. I said, don't move your stop yet. Move it. You can pull it to the entry level, and we taken out and reaching our target number 1, and you have your stop at 28. And now, wonderful thing happens. At 10 o'clock and 14 minutes, we already saw the signs of rejection and excess on the downside. Aggressive buying immediately starts after reaching the 32 and no more selling coming in, but aggressive buying starting at 10 o'clock, 13 minutes and 30 seconds. 10 o'clock, 30 minutes and 13 seconds. They're coming in again. And now, you see that this becomes a holding structure. That means the excess and the downside find every time when they try to sell into the level which they did, we find absorption and find continuation then of long bias. We see again even more selling, you see this, selling here and even more selling, but no lower price. Means one thing exactly, absorption. Nothing else can happen here than absorption. So absorption happened, we stay in the trade. All right, we already won half an hour in this trade, but I told you in between for the T2, for the target number 2, and even for the home run, we need more time than 20 or 15 or 30 minutes. All right, this is more than like an intraday swing. All right, no matter what. Anyway, absorption, new buyers coming in, buyers, a buyer, long, more long, increasing long volume, cannot take out the high yet, falling back, testing, even more, selling, people get out of their longs, some try to push lower, some people get even maybe trapped in new shorts, but you see the 34 level, the yesterday value area high, where we want to see the increase of buy volume and stay in the trade or even open up a new position. It holds. We stay in the trade. We're not getting nervous. We accept our emotions, feelings, and physical sensations. Say, no matter what, I know my behavioral patterns will protect me from a loss. But I stay in a clear mindset. I want to work for a clear mindset of trading. And we stay in the trade. I told you, we stay in this trade. And you see, they coming back. You see that they trying to sell, but 34 holds yesterday value high. And now, increase new buyers coming in. And again. Some little bit algo spoofing here around the POC. No much price movement, only 1, 2 ticks, 1, 2, 1 and up, 1 down, 1 up, 1 down. But now, even here, I told you live, you can see that some behavior changes. People now going back to this micro balanced area. We going back to the higher part, to the upper 50% of this micro balanced area. And you see some changes now in behavior. That means people now starting at 10 o'clock, 49 minutes and 30 seconds to sell into the 80.38 and the 30C7. And 38.37 we see some quiet selling, but it got absorbed. Price did not react. We stay and bulls defended the 37 level. So we stay at the 37. Even some pushing lower at the moment 10.51. You don't see it, but you see it in Delta. They try to sell. But buyers coming in back again. Strong. Level wasn't taken out. And then they made they invested huge risk on and put some more longs into the book. Here at 10 o'clock 51 and 10 o'clock 51 and 30 seconds, a lot of positions were bought into this level. Almost 1,000 contracts. And then we stay and kept this level here. And then we reached our target number 240. Now they're even starting to build volume at the next higher area. And now you even have, if you have a last contract or last lot in your book for my target number 3, I would go then for the target number 3 around the 50 area, because 50 is in the composite profile a POC. It's the upper edge, the upper region. It's from the Friday high, and it's from Thursday, from the minor distribution, the higher volume edge, and also from the day before the repoc. So this is a little bit kind of where we have more advantage here for some responsive sellers at this region. But you see, everything's working great, and the holy grail of trading, if you're technically really good, may be in your mindset. Not being controlled at execution phase and taking on a wrong risk-reward trade, or if you even can control already your execution, not to get into the situation where emotion take over in the management phase. And I described it some kind of thinking of at this moment where the one who pulled a stop to close because he didn't look at the buyer's control level because his emotion driven him crazy, and he pushed his stop to close. At this moment, it's like maybe if you're not clear-minded and trained and clear-minded and a clear mindset as a trader, then it's like an airplane, a pilot who tried to land an airplane in a stormy weather condition. And if you're not trained to a stormy weather condition and you're a pilot, I would not better be on this airplane, because this is maybe the plane that crashes then, because he's just not trained. And if he's not trained, he has nothing else but emotional reaction to this behavior and to this environment of a stormy, windy situation while landing an airplane. And this is like in trading, when you're in a management phase. And even you have seen, okay, the more important low volume node and B model is here at the 31, so my stop is at the 28, 29 area, but not only because this tight little range is here acceptance and knowing, but bulls still are comfortable because the initiative buying started around from this area and from this, then you know it would drive you maybe crazy to see the delta at this moment. At this moment, how it falls down. See this here? And you then made a decision based on your reaction. Oh my God, oh my God, oh God, and still, look how much delta fall. And look how price reacted. And this is the stormy condition. And you made your decision maybe then not from your clear trading master mindset, but from your emotions. So holy grail is maybe to develop new behavioral patterns, of course. Find acceptance, don't fight them. That's a call that the emotions will tell you that it's better to leave now the trade and watch your P&L and secure your profits. But on the other side, if you find acceptance for these old behavioral patterns, a good thing would be to start, as I told you live, write down your behavior of your emotions, your thoughts, and your physical sensations, to be aware and accept yourself and don't manipulate yourself, and see really how your emotions are running at this moment, are working. And then you may see, wow, this really drove me crazy, and that's why I made to end my trades too early. I hope that can help you, and thank you for watching. This is Anton Höpfel for Manapa Trading. See you tomorrow.